Hi there, Serial Trader here. Let's have a look at the major US indices. And we'll start off with SPX. So since the last video, we had this wave 4 high in place, and I was looking for a lower low down in wave 5 below the previous low we made in wave 3. So Monday it was a nice negative day, and then we actually had a really negative day today, at least initially. And then we had a pretty good reversal intraday and a strong close despite still being down for the day overall. I had these Fibonacci targets, these reverse fib relationships of wave 4. And this 1.382 objective was around 2670. So we went as low as 2691. So we got basically within 20 points of the 1.382 target. So you don't always make target, but the real key was that we needed to make a low below this previous low here to have a 5-wave sequence down and complete. Now we've done that. So if today was the bottom, which there's some early signs that it was, and just to take a stab at having an opinion, I would say, yeah, it was probably the bottom today, although that could certainly change. But if not the bottom, quite close to it. At this point, the next real move of significance should be some sort of corrective rally up to at least the previous fourth wave here of 1 lesser degree, which should be right into the 2800 area. 2816 is the previous fourth wave peak. We could certainly go beyond that, but it's a reasonable initial target at least. And if we just do a fib pull of this overall 5-wave structure down to get some retracement levels to look for. So interestingly enough, the 50% retracement, which would be a pretty common pullback in a wave B or a wave 2, gets us basically right to that wave 4 extreme. And then the 618 retracement, which would also be very common, would get us to 2845, so let's call it around 2850. So we should at least get a bounce up here into the 2800s. And at that point, it'd be looking for another peak to form. Okay, looking for a nice corrective rally up, a peak to form, and then position. So that'll give us either a wave 2 or a wave B. Whether we have a 5 down for 1 or a 5 down for 8, we don't know yet. But we do know we have a 5 down, and we know that that should lead to a 3 up. At that point, once we get the 3 up and it looks mature, starts rolling over, maybe ideally you get a candlestick sell signal after it looks mature. Then you position bearish once again for this next 5-wave decline in either a C wave or a third wave. Again, we don't know yet. So today, lots of activity. I did a lot of positions today, trading them. Now, initially, on that really negative open there, and we stabbed lower, I closed a bunch of my short futures, so that I cleaned up nicely on the short futures contracts, left those in place, and then I actually switched to long futures, and I did that later in the day. As soon as SPX, if I could just go to the fairly short time frame here, as soon as SPX, I believe it was right here, so this was the open we had. We opened much lower. As soon as SPX, the cash index, actually took out the open there, I thought that was a pretty good sign of a reversal. Also at that point we had a little higher low, and then we made a higher high and took out the open. That was my signal over here on the futures to actually go long futures, and then my stop is just below the actual low that the futures made, which was 26.92.25. So my stop is at 26.92, and I'm still holding those long futures. I may tighten up my stop a bit after we have some sort of consolidation, and then we continue. That'll be a new level to raise my stop to. But for now, I'm giving it some room, some wiggle room there. Now, another thing I want to go to back on SPX, and that's not the only trade I did, but I'm just referring to the futures first. We'll get to the other stuff later on Thinkorswim there. Another thing I want to refer to is, so we made a lower low in price. Counts complete is 5 waves down. Now you see we have a bullish divergence on daily RSI. So on our third wave, RSI made this extreme low. And if I can just look at the levels here. So on the third wave, RSI went as low as 17 on the daily. Now on this fifth wave, RSI has only gone as low as 32. So a clear higher low in RSI despite a lower low in price. Nice bullish divergence. So that's the daily chart. 4-hour chart as well. We have a nice bullish divergence on RSI on the 4-hour chart. Also on the MACD moving averages, nice bullish divergence on the 4-hour chart. So I'm going to point that out. And also on the hourly chart. So hourly chart, you can see what I'm getting at here. Multiple time frames confirming. So here's your RSI low, which coincide quite nicely with the wave 3 low on the hourly chart. And now clearly a higher low in our wave 5 low on the hourly RSI. And the same goes for the MACD moving averages on the hourly chart. So bullish divergence on multiple time frames. That's another reason to embrace that we have a bottom, or very nearly a bottom if it's not quite in place. I'm definitely favoring that it is at this point. Alright, so that should be good for the SPX chart, on the waves here at least. We'll go over to the candlestick chart, and let's have a look at this. So, thinkorswim candlestick chart. Again, you can still see the 5 waves down here even though it's not labeled. Strong rejection from the lows of the day. Kind of a bullish reversal candlestick. Not quite a hammer because the body is a little too big to be a hammer. But definitely a long lower shadow rejecting those lower prices. And you can even see here on the daily stochastics oscillator, you have a bullish divergence here as well. So stochastics made their low here on the wave 3 low, and then made a higher low, while price made a lower low. So basically any study you use is going to show that divergence in most cases. Now at this point, it's still early because we're not back above the T line. This isn't technically a candlestick buy signal. You could argue it kind of is, but not a great one. But if you wait until you're back above the T line at this point, you might be giving up quite a few SPX points. So I like to get a jump on it, right? With that being said, before I move to the other charts, so what did I do? I closed a bunch of the long SPY puts I had. Those did phenomenally well. And closed some of them. I rolled some down to basically being at the money, okay? And then I also converted that to a straddle. So basically I went delta neutral by buying enough calls to make the delta essentially 0 on those ones. And the reason for doing that is, okay, I want the calls because I want to play the upside on this correction we're going to have upwards. But I left the puts in place and made it delta neutral in case we come down and either make a slightly new low or just challenge low, right? And I'll get to the shorter time frame in a moment to show you what I mean by that. At that point, I will take the puts off and maybe either add calls or at least just leave the calls that I bought in place. And I'll show you on the 10-minute time frame here what I'm thinking, right? So this is a 10-minute chart, SPX cash index here. You can see we opened way down, gap down, dug deeper, and then started reversing, made a high, higher low, and then broke to a higher high and took out the opening price of the day. And at that point, there was continuation. So what I'm kind of seeing here from an Elliott wave perspective, and if I just briefly switch this to a bar, I see a 1 up, 2 down, 3 up, 4 down. Notice there's no overlap. And now possibly a wave 5 up towards the end of the day. And now maybe pulling back in a little corrective move. Maybe we'll come back down here to this wave 4 support level. Maybe we'll go a little deeper. And just to throw some fib levels up there. And this is why I left those puts in place on that delta neutral SPY position. Just to show some Fibonacci levels, the most common ones. Yeah, that should be good. So here we go. So maybe we'll come down and hit that 50% retracement level, or the 618, or even go really deep, 786. But the key is here, I expect a little bit of consolidation short term. And when I see that, and when it looks like it's ending, I'll take the puts out and either add to the calls or just at least leave them in place, because there's quite a few of them at this point. And that's my game plan there. And if it just doesn't consolidate at all and just keeps going up, well, it's delta neutral, so it'll immediately start gaining delta on the calls. And I think they're 275 strike or something like that. Yeah, 275 strike. Let me check on that. Yes, 275 strike calls, 275 strike puts, and basically delta neutral. The delta's negative 300, which for how many options I have is essentially nothing. It's neutral. That'll change very quickly. I think it was neutral up here, but then maybe it gained some negative delta coming down towards the end of the day. A little bit of a sell-off there from the highs. So I'll take that away. Go to the candlesticks again. So that's my rationale behind that position. I also had VIX calls that I closed, and they did extremely well. So VIX, I'll get to the VIX in a bit here, and then we'll talk about that. So I think we're done with the SPX chart. If you have an SPX, actual cash position, well, that's not really possible. It's just a index. But if you're using the SPX levels as kind of a mental stop, if you want to declare that the low is in today, then you're going to want to embrace 26.9143 as the must hold level for a mental stop. Okay, and that stop will be a little different if you're actually long the SPY ETF. We can look at that quickly just to give the number. So if you want to say that the bottom is in and you're bullish, up to the 2800s against the current low, and you want to play SPY for doing that, certainly not a bad idea. The low that you must hold on SPY is 268.61. Okay. All right. Now we'll go to the Dow Jones Industrial Average, and the Dow also did a nice 5 waves down from the top, and the Dow did a nice bullish reversal candlestick, long lower shadow, so very much in alignment with the S&P, and I would be expecting a similar, upward correction, at least back up to this previous 4th wave, and possibly beyond that. But if we just do some fib levels on the Dow, get a couple to look for. So the 50 and the 618 would be my prime suspects. So you'd be looking at 25,861 for the 50% retracement, and 26,118 for the 618 retracement. So some levels to look for. Okay, and let's go to the Nasdaq Composite. And Nasdaq Composite also confirming, making its 5th wave low below the previous 3rd wave low here. So Nasdaq a nice 1 down, 2 up, 3 down, 4 up, 5 down. So all 3 major indices have done a nice clear 5 waves down from the top. So they're all in alignment, which makes it a lot easier to analyze when there's no discrepancies. Nasdaq looking to come up to its previous 4th wave of 1 lesser degree at a minimum, and we'll put some fib levels also to watch for. And retracement, so the 50% retracement would be 7,696. The 618 would be 7,799. So basically 7,800. I'll just leave that up there for now. All right, and the must-hold level, if you want to say that the Nasdaq is bottomed here, if maybe you're bullish some individual tech names for the bounce that we're likely having. You want to stay long against the 72.60 low, 72.60.13. That's the must hold if this is the bottom here, right? So that's the Nasdaq Composite and VIX. So let's get to the VIX. So this was the VIX peak that we made when we made the wave 3 low on the indices, and that came in at 28.84. Now, if you recall before, on this consolidation here, I bought the 17 strike VIX calls, which were basically at the money, and Today we went as high as 24.66 on the VIX. So we actually made a lower high in VIX, which actually works quite well because typically fifth waves are weaker than third waves. So there shouldn't be as much fear in a fifth wave down than there was in a third wave because it's not as large of a wave, it didn't move as fast, so this makes sense. So this kind of confirms the wave count, the fact that we made a lower high in VIX, but a lower low on the indices. That tells me that we just completed a nice fifth wave, and VIX should start selling off pretty hard here as the indices bounce up. So right near the open, shortly after the open, VIX was pretty close to its peak. I believe it was close to 24 in the high 23s, and I sold my VIX calls for a very nice gain there, over 100% gain on those. And at this point, I'm not playing the VIX options. You could, I suppose, short VIX by either shorting one of the VIX ETFs or just buying VIX puts or doing call credit spread on VIX. There's a few ways you can do it, but not me. I'll just play the long side on the S&P and maybe look to reload on VIX once it looks like we've peaked out again in an upward correction on the indexes and VIX has kind of bottomed out again. That'll be a nice place to probably buy some more VIX calls. But for now, just watching and waiting. And yeah, VIX rejected the highs of the day quite strongly, so that's another sign that we've likely seen a bottom. Nice big intraday reversal here on VIX. Good sign that we've seen a bottom on the indices. All right, so that's VIX. So yeah, just to summarize, currently in that delta neutral SPY option position, looking to take the puts off on some short-term consolidation and then leave the calls in place or even add to them. Currently long the futures against the low of the futures I mentioned earlier. And yeah, that's probably it for now. All right, Serial Trader signing off.